Hello, folks. Brandon Chapman with you today. It's another edition of the Monday Theo Night video. Big bets are being made today for the first trading day of the year. We're going to take a look at some of those bets for the week, for the next 6 months, for the next year, some key symbols we're going to look at in the next 10 minutes or so. Anyway, as we look at the S&P, we did achieve new highs today. So when I say new high, I guess we're talking about a higher close versus Friday. You look at the very nice move that we got going into the first day of the Santa Claus rally. Of course, the Santa Claus rally period wraps up tomorrow as we're moving back towards prior highs, potentially breaking out of what's called a flag pattern. So again, depending on how you draw your lines, you may consider today a breakout. You look at the bigger pattern here as well, the former ascending triangle of rising lows and equal highs, giving you what? 4,500 to a little over 4,700. Added to the breakout level, you're looking at potentially going to 4,900 in the coming weeks. In fact, I did a class for TheoTrade for our members about a week and a half talking about the world's 50 most profitable price patterns. That was one of them, by the way. But as we look at the S&P, again, you're looking at the progression, the pullback, today's move, and potential breakout. It looks like we may be looking to move higher in the next week or two, having the potential maybe achieving a 4,900. Now, as you think about if the market does make a progression like that, what is going to lead the way? Well, if you look at the sector performance, energy really topped the list today, up 3%. We had cyclicals and we had financials. Now, financials were kind of just off the bit with only 1% move today, but when you look at treasury yields, 10-year treasuries were up substantially, yields rather, prices down 1.16 points. Now just move that over a decimal point, you'll notice the 10-year's at 1.628%. If you look at the 30-year, it was up 1.11. What does this mean? The yield curve flattened, right? The 10-year got closer to the 30-year. Look at the 5-year, FVX. It was up 1.02. So the 10 compressed with the 30 a little bit, spaced out with the 5-year. But again, we are seeing compression in the yield curve despite today's selling. But of course, rising treasury yields does create a steeper curve per se, since banks are borrowing at virtually zero. So financials did play out relatively positively. And of course, this all kicked off back here on the 20th. One we talked about in the video, the unusual option activity in the financial space. This is just a continuation of that move. But again, that's the bond market, right? We got stocks. Well, let's take a look at gold. I mean, gold today did not fare well, down 1.5%. And interesting enough, this was a product that saw significant option activity on the call side. So when you go to the trade tab here, you look out. Of course, I got a little fleeting position out here, but if we go out to June, what you'll notice, June 30, we're at here, the quarterly expirations. We're talking a half a year. Then you start to look at the trade that was put on. 50,000 contracts at the 210, another 50,000 at the 230. What is this called? Come down, you look at time and sales. It'll give you an indication, but buying the 210, selling the 230, right? In two prints. So these are two very, very large trades placed at virtually the same time today, about 23 minutes apart. 23,000, 27,000 contract prints. This shows a very large expectation that GLD is going to be higher by June. Now, what we have to pass through in order to get there, I don't know, but that is a very substantial move looking out on GLD to 230 by middle of next year. You break this out to like a 3-year weekly chart, 230 blows away the 2020 high. It definitely probably presumes there may be some activity on the part of the Fed that may create even more liquidity today, which is interesting. So you look at the sell-off in the bond market, the selling in gold, but on the backdrop here, you have significant call option activity, a long call vertical looking at a possibility of 230 by the end of June. Another large trade made today was on SLV. SLV's been down a bit. It's lagged gold. I mean, traditionally, this is a seasonally bullish time for gold, despite the fact it's down today. But as we look at silver, again, silver will typically lag gold this kind of time of year. Not all the time, but a lot of times it has recently as well. It was also down today, although recovered from its lows. But as we look at today's trade, you look at this activity here, 125,000 contracts. Folks, this is one print for about 17-cent cost, a 35 and a 40. This is for 20 Jan 2023. This is basically saying what? They're expecting silver to be upwards of $40 by the end of the year, start of next year. And by the way, it costs you about, in this case, cost them about 17 cents, and yet has $5 of upside minus 17 cents. That's $4.83. So you risk 17 to make 483 if inflation, or at least silver prices, go soaring to about $40, which is crazy to think about. But hey, anything's possible when we're talking trillions upon trillions of dollars of monetization, and the possibility the Fed may step back in this year if things get kind of ugly. That gives you a very substantial forecast coming into the middle of this year, end of next year for GLD and SLV for the precious metals space. Another stock today was interesting was Ford. Ford broke out. This is a diamond formation here. This is one I highlighted about a week and a half ago when I did my class. Also looking at two significant prints here, 1.9 million shares filled, 1.14 million shares filled, right about the same price in this kind of 2130 area, breaking out today and accelerating into the close. The height of this pattern, 1850 to 2150, that's $3 on the break of 21, gives you about $24 as a potential target here in the next few weeks. So again, significant trade in Ford. Also increase in volume above average as well. So a nice move today. And as we look at the trade in Ford, and this is activity I'll frequently post on during the day for TheoTrade members. I posted on earlier today before my session. But in Ford, it was the 18 Feb 22. So we come down here 18 Feb. And what you saw was this 2430. This was a spread. It was 32,000 contracts filled in one print, and it accompanied another trade here for Jan. And what happened was they took the 21 Jan, and they rolled it. So in other words, they closed out the contracts in here, rolled it out and up for a small credit to the February expiration, amplifying the expectation that Ford may be able to go to 30. And again, that's a very, very big move for only a little bit over a month remaining. But again, the 24 strike is about where it kicks in. That's the near-term target here for Ford, the chance we may progress into there. And again, when you consider the cost and the fact they already have profits and they rolled it out, this trade cost, again, you consider the amount of the trade cost in here. They took about half the cost of trade, booked half of it, kept the other half on, and rolled it out and up going forward here. Sorry, something popped up there. Anyway, all right. So that's Ford. Again, giving big expectations here. Tesla today, and it was really for the weekly expiration. It was the 7 Jan expiration here. And as we kind of scroll down, there was sizable activity, 137,000 contracts traded at the 1200. And guess where we pegged today? And this did not start the session here for Tesla. It just continued to accelerate. We saw it right off the bat, right off the open today in Tesla. Just kind of scroll back towards the open. It opened up at around 1146. But again, where did it run to? It ran right towards that 1200 strike here going into the close for Tesla, where all that activity kicked in. So expect to see volatility this week for Tesla. I mean, sometimes this front week activity, we were kind of forming a rising wedge here, but spilled out the end and then rallied and continued to rally throughout the trading session. But again, expect to see a little volatility. But you saw stuff building out here for 22, 1220, about every 50 points, 1250 out here, 1300, some stuff, 1350 and 1400. So you see a lot of activity, a lot of it bought right off the bat this morning, just every 50 points in Tesla. So again, could this really ramp up to 1350, 1400? It's a possibility for this week. Probably unlikely. So watch this early activity, maybe tomorrow even as well. See if it gets faded. There could be a trade on the way back and then on the way back up again, as we're basically starting to encounter its high from November at around 1244. Another stock today in Apple. Apple also saw significant activity. It was up about 2.5%, outperforming the market. This one was not quite as substantial, but if we look at the March expiration, so we're out here about 74 days, and you look out around the 190 strike price for Apple, 11,000 contracts traded. Again, some bullish expectation building. You're not quite as saucy or extreme as some of these other stocks, but 190 would certainly be a pretty significant target here. Kind of a mini kind of cup and handle for the most part. The range is from about a 140, 67.50 to 180. That's about 12.5 points. 190 doesn't seem too far away for potentially getting there throughout this next week. A couple other side trades. Western Union is one I've talked about before. As an opportunity back here, I have a top-down Friday watch list that I added to kind of grind out. But today we saw some acceleration up near 4% on the session. And we saw some trade come in on the Jan 20 calls. So you look here, 4,000 contracts traded. Gives you kind of a near-term projection for the price at $20. So again, $20 gets you to about here. This is an extraordinarily volatile stock, but this is a nice little projection for this January expiration about 18 days out. So give you a sense of what to expect. Now, utilities did not perform super well today, as you might expect. But Exelon Corp utility, these are expensive stocks, but you'll notice we rallied off the low of the session, basically kind of forming a very long-legged, kind of a doji type formation, a dragonfly doji. There's a small body on there, but this is a bullish candle, and it happened to coincide with a significant trade for the Feb 60 calls here. 5,000 contracts traded. Again, gives you some upside, near-term expectation, possibly reaching 60. So again, this is a trade that held on very well despite the selling in the bond market. Is utility stock interest rate sensitive? Someone's taking a little bit of an upside bet here to the 60 strike. Finally, the last one we'll talk about here is DT. DT. There we go. Stock's been down, kind of a bit of a divergence forming. These lows are not stretching to the downside. But man, the activity came in rather big today for a May expiration. So it's out there a little bit, but 13,000 contracts traded at the 70 strike. You look at today's statistics, 71% filled at the ask, about 8 times the average. So when you think about that possibility out here stretching to 70, that's a pretty decent size move here. But again, watch for maybe a breakout above 62.5, 62.30 with a 70 plus target on DT. Definitely want to see that trigger to see this confirm. Anyway, folks, I hope this gives you an idea of some of the bigger projections being made by today's option activity and gives you some ideas for the coming days and maybe months here with some of those bigger trades.